Imagine a company so wealthy that it could wage wars, build cities, print its own currency, negotiate treaties with kings, command a private army larger than the militaries of many nations. Today, that sounds less like a corporation and more like an empire. But more than 4 centuries ago, one company did exactly that. It was called the Dutch East India Company, known by its Dutch initials, the VOC, and many historians consider it the wealthiest corporation in human history. Its rise transformed global trade. Its collapse reshaped the world economy. And its story became the blueprint for every multinational corporation that followed. The story begins during the Age of Exploration. Europe had developed an insatiable appetite for spices. Pepper, nutmeg, cloves, cinnamon. These were not luxury seasonings alone. They preserved food, served medicinal purposes, displayed wealth, and generated extraordinary profits. The islands of Southeast Asia produced many of these valuable commodities. Whoever controlled the spice trade controlled one of the world's most profitable industries. Several Dutch trading companies competed fiercely for access to these markets. Unfortunately for the Dutch Republic, the competition created an unexpected problem. The companies often drove prices higher while bidding against one another. Profits suffered. Investors complained. The government recognized that competing against themselves made little sense. So, in the early 17th century, something revolutionary happened. The competing companies merged. The result was the Verenigde Oost-Indisch Company, the Dutch East India Company. Unlike previous trading ventures, the VOC received extraordinary powers from the Dutch government. It can negotiate treaties, establish colonies, build forts, recruit soldiers, maintain warships, administer justice, and declare war when necessary. It was not merely a business. It was effectively a government-backed commercial empire. Even more revolutionary was its financial structure. Rather than financing a single voyage and dissolving afterward, investors purchased permanent shares in the company. Ownership could be transferred between investors. Profits were distributed through dividends. This innovation helped create one of the world's first organized stock markets. Modern investing owes much of its foundation to this remarkable experiment. With enormous financial resources at its disposal, the VOC expanded rapidly. Its ships crossed oceans carrying spices, silk, porcelain, tea, textiles, and precious goods between Asia and Europe. Trading posts became fortified settlements. Settlements evolved into colonial centers. The company's headquarters in Asia became Batavia, now modern Jakarta. From there, the VOC coordinated an immense commercial network stretching across continents. Its dominance rested upon control, not simply participation in trade. The company sought monopolies. Rather than competing fairly, it often eliminated competitors entirely. In some regions, local farmers were required to sell valuable crops exclusively to the VOC. Alternative buyers were prohibited. Prices were tightly controlled. Where diplomacy failed, military force frequently followed. The company's private army enforced commercial interests across thousands of miles. At its peak, the VOC operated hundreds of ships, employed tens of thousands of people, and managed one of the largest commercial fleets in existence. The profits were staggering. Adjusted for today's economy, estimates suggest the company's peak valuation exceeded that of any corporation before or since. No modern technology company, no global bank, no industrial giant has clearly surpassed the scale of economic power the VOC once commanded. For generations, investors viewed the company as nearly unstoppable. Its dividends attracted enormous wealth. Its global reach expanded continuously. Its influence touched governments, merchants, and consumers across the world. But beneath the extraordinary success, weaknesses slowly emerged. The first problem was bureaucracy. As the organization expanded, decision-making became increasingly complicated. Communication between Europe and Asia required months. Instructions often arrived long after circumstances had changed. Local administrators gained significant autonomy. Oversight weakened. Inefficiency increased. The second problem was corruption. The company's vast distance from headquarters made accountability difficult. Officials sometimes prioritized personal enrichment over corporate interests. Bribery became common. Unauthorized private trading flourished. Resources intended for the company occasionally disappeared into private fortunes. These losses accumulated gradually over decades. Then came changing economic conditions. Competition intensified. Other European powers expanded their own trading networks. The British East India Company emerged as a formidable rival. Global markets evolved. Profit margins narrowed. Maintaining military outposts and administrative infrastructure became increasingly expensive. The company had been built during an era of extraordinary commercial expansion. Sustaining that empire proved far more difficult. Debt began accumulating. To maintain operations, the VOC borrowed heavily. Initially, investors remained confident. The company had survived previous challenges. Surely it would recover again. But the underlying financial situation continued deteriorating. Revenues struggled to keep pace with mounting expenses. Administrative costs rose. Military expenditures expanded. Interest payments increased. The company remained enormous. Yet its foundations were weakening. Political events accelerated the decline. Wars disrupted trade. Shipping became more dangerous. European conflicts strained financial resources. At the same time, public confidence declined. Investors became increasingly skeptical. The corporation that had once symbolized unlimited prosperity now appeared burdened by debt and inefficiency. Eventually, the situation became unsustainable. After nearly 2 centuries of operation, the Dutch government assumed control of the company's remaining assets. The VOC was formally dissolved. Its territories, infrastructure, debts, and responsibilities passed to the state. The world's first megacorporation had come to an end. Its collapse marked more than the failure of a single business. It demonstrated that even organizations possessing extraordinary wealth and political influence remain vulnerable to fundamental economic realities. Monopolies create complacency. Complex bureaucracies reduce efficiency. Unchecked corruption destroys trust. Excessive debt limits flexibility. Competitive advantages eventually erode. These lessons continue to shape corporate strategy centuries later. The story of the VOC also transformed capitalism itself. It introduced permanent shareholder ownership, large-scale equity investment, organized securities markets, global corporate governance. Many financial institutions operating today trace their origins to innovations pioneered during the company's existence. Modern multinational corporations operate differently in countless ways. Most cannot legally maintain private armies. Few negotiate treaties or administer colonies. Yet the basic idea remains familiar. Raise capital from investors. Expand internationally. Control supply chains. Generate profits across global markets. The Dutch East India Company showed the world both the extraordinary potential and the immense dangers of concentrated corporate power. It became richer than kingdoms, more influential than governments, and powerful enough to shape the course of history itself. But no amount of wealth could overcome poor governance, rising debt, changing markets, and organizational decay. The richest corporation humanity has ever known did not collapse because of one catastrophic event. It collapsed because decades of small problems slowly became impossible to ignore. Its rise built the foundations of modern global business. Its fall became one of history's greatest warnings. Even the largest empire ever created by shareholders can disappear when growth ends and fundamentals begin to fail. The first megacorporation changed the world forever. Its greatest legacy was proving that companies could become powerful enough to rival nations. Its greatest lesson was proving that no corporation, regardless of its size, is too big to fall.